Joining me now, Pence Wealth Management CIO, Dryden Pence, and trader Kenny Polcari. Kenny, this is a market in need of a catalyst, and it ain't listening to the Davos navel gazers who are forever misguided or off point. Where are they going to get that catalyst?
You know, it's interesting because I used to listen to that a lot.
Yeah.
They don't seem to be the case now. I think they're going to get the catalyst in the ongoing earnings releases that started on Friday. And like to your point, they showed some mixed results. They showed some caution going forward. I think that's the story we're going to hear through this earnings season. I think that's what investors are going to focus on in terms of, what's the next move in the market. I think they're really looking to see how this economy is performing and what these companies are saying about the next 4 to 6 months out. I don't think they're paying any attention to what's going on in Davos, quite honestly.
And Dryden, what are you seeing? Because as we continue to watch this, you've got a lot of money in assets under management, and the market has done incredibly well over the past year. What is the catalyst that pushes it in either direction?
Well, I think there's two things. I think bank earnings were not that great, but you got a whole bunch of other companies that aren't quite as affected by Fed interest rates. And so I think we're going to see another series of beats. And we're going to, again, we continue to see these earnings beats. The beat goes on. And I think that we're going to see that on fourth quarter. That's going to be part of a catalyst going forward. We think the fundamental economy is pretty strong. We think that we're broadening out the earnings and margins. We think we'll probably continue to increase. So when you predict about 11% earnings and margin growth over the next year, you probably hold the multiple constant, and you've got a high single-digit, low double-digit market, and we think that that's probably what we're in for on the whole. It's kind of a broader rally going forward, driven by fundamentals. We're now back to a fundamentals-driven situation. We're past all this COVID stuff.
Well, if Dryden is right, Kenny, and the economy is pretty darn stable, what justification will the Fed have, even if it's March, to cut rates? I mean, is that really going to happen?
I don't think the Fed has any justification. I'm on the side of the argument that they hold rates steady, that they're not cutting rates. This idea that came to us towards the last 5 or 6 weeks of 2023, that not only were they going to cut rates, 2 and 3 times, now suddenly it was 4 and 5 times. I thought that was completely illogical. I continue to think it's illogical. I don't even see how the Fed can even, I'm on the side that they do nothing, but if they go once, maybe twice, is probably the best you're going to get. Because don't forget, Liz, we're also in a presidential election season. If the Fed really starts fooling with rates as we approach the election, within the 4 to 5 months, they get accused of being political, and that's really not where they should be.
Really quick, Dryden, I know that you own Apple shares in some of your areas here. Tell me what you think. And it's not just the story about them sort of rejiggering the new Apple Watch to make sure that it does allow imports, but Apple is cutting prices on some of the iPhones, including the 15 in China, by as much as $70 per iPhone. What does that tell you?
Well, while they're doing that, Apple has tremendous margin on all of its products. Its gross margins are about 40%. Its nets are about 25%. They had the ability to adjust prices to maintain market share. And again, it's always part of the life cycle replacement. Once you have an Apple phone, you tend to renew. But we think that even as some of this data comes out that's maybe less than perfect, we think it's the world's greatest consumer products company and will continue to be so, both domestic and internationally.
Yeah, it's had a pretty good one-year chart, that's for sure, up more than 30%. So nothing to sneeze at here. Dryden, Kenny, great to see you. Thank you both for joining us on this Monday. Yes, it may be MLK Jr.